recording, and that should be it. All right, let's just talk about INJ really quickly. And before we get into the other stuff, one of the guys asked for INJ USDT on Binance. Let's just start from a monthly and we'll drill it down. Right. On a monthly, you can see that we are in an order block at the moment here. And if this is going to be bearish, then if we are in this order block, then we want to fill 50% of the range, which is somewhere around here. And then we would expect price to turn right about here. Now, not too convinced of this order block on a monthly, so maybe we'll have to draw it down to a weekly. In terms of where we were or are in the range, if you took from the absolute bottom to the top, we were just below the 50%. We'll keep that firm on because it could serve as a place where this bounces off to see new highs, right? On a weekly, well, on a monthly, you can see that we bounced off the breaker here and here, a monthly breaker. We'll just see what that looks like when we drill down to a weekly. Right. On a weekly, we have, let's drill this down a bit more. Take this here, put it up here. Again, this is, or these are order blocks, but not the best or the greatest. There is some imbalance setting up here at about 582. We could drill it down to somewhere there, but again, this is not the best of order blocks since the last candle or the highest candle here is an up candle, right? So this one is a good order block, but 50% of it is body and the rest is wick. So sort of leaning towards rejection block kind of vibes here. So anything coming into this range, you'd want to see price move away. If this is where institutions got in or sold off previously, then this area here is where we would want to see that happen again. And then 50% of that is 780. So if you are bearish on INJ, then the place to look for would be not closing above the 50% here. On a lower time frame, you can see that price we've made a higher low leading to a higher high, right? And there wasn't really any liquidity taken here except for here, where we had a high, a low, a higher high, and a lower low. So in terms of entries, if this was the order block here, that would have been your entry there. CSD occurred, or the change in the state of delivery occurred somewhere around here, 140, and then you can see the rest is history. Now we had this high broken here at 3.044. That left a fair value gap behind, and that fair value gap would have actually been to enter as well. In terms of any structure here, you can see that we have the models that we know and love showing face, where you had price basing off here, right? And then you had a liquidity grab here. Failure to close below this low results in an opposing liquidity run, which you saw happen here. Now, if we have something like this happening and we left a massive wick behind, I would want to mark that wick off, at least 50% of that wick on a weekly, So that's somewhere there inside the fair value gap. And if price were to return to this, let's have a look on the daily. Right, if the price were to return to this order block inside here, that would be your next sort of entry for that, right? The new delivery, or the start of the new delivery, actually happened from here. This candle broke the high and the start of the new delivery occurred here. You can see price came back, took the low of that candle, and then continued higher. We don't use any RSIs or MACDs or anything of that sort, so we don't look at any bearish divergence. All we're looking for is if price is to continue a bit higher from here, what are the chances that it does something like this, back to the order block, or the rejection block lying here as inverted commas support, giving us an entry and then continuing higher. So if you were looking for entries on INJ, then I'd look around the 264, 265 mark. And that should take us higher on INJ. Again, old highs being broken become fair value for buying a breaker block. So you have this entire zone here as a breaker. You can see how price has sort of respected it. Not a fan of breaking through the breaker blocks here, but this is a breaker. And we had a small FEG inside here and some order blocks. So I'd look for, I'd actually look for something like this.
Right? Hi guys.
Hi, what's up, El Dente? I'd look for something like this and a further push to the upside, right? Because this is where your demand currently is, all the way down here. So for INJ, we are looking for slightly higher prices, but a pullback, yeah, we could deal with the pullback. Could use a pullback, yeah. Right, nothing too much, nothing too fancy to say about INJ. Al Dente, anything you want to look at in specific?
Please?
Anything you want to look at in specific?
BTC. I am a bit late in.
Right. So you would remember me posting this in the group, right? Accumulation, manipulation, distribution of the entire year, and that is broken down into 2, 3, 4, 5 parts, right? And within each part, you'd have a similar 3 phases occurring within each of these parts, because it's all fractal. So the year started off for BTC in an accumulation phase, right here, and it stopped accumulating around the 28th of February. And within the accumulation phase, we have we have the manipulation phase next. And what I did there was, let's just try and draw this out if I can, and see whether we, there, right? Now you'd remember me telling you around the 11th of March or so that this starts a new cycle up. So we had accumulation here within the manipulation cycle, and then we had the start of the manipulation cycle, which ended here, and we had the distribution phase, which kind of just went sideways here, right? To end the larger manipulation cycle. Now if you're looking for, I think I dropped the fibs in the Discord of how to do this, and it's quite simple. Basically, if you were to, this is for crypto, this could be, let's use this one, right? Let's change it up a bit. Crypto days. Let's do it this way rather. Let's use a GAN box. So all we do is we use a GAN box and draw it out in time, and we got AMD for crypto, and then the levels are 0 starts the phase, 0.4 is the accumulation, 0.6 is the manipulation, and ends at 1, which is the distribution, right? Now if you were to put this onto any piece of price action that you were to or would want to cover, let's say a daily.
Yes, but when to start? Where's the start point?
Yeah, there's a start point all the time. You can start, these things are all fractal in nature, right? So let's go to a start point and figure out what we can do. Now, if you were to go to the daily chart, for example, or a weekly time frame, right? On the weekly time frame, all you need to do is, once you have the settings input, right, you go to the latest weekly candle and you click on it and you push it one forward, right? Just one block forward, and you stop. When you come down to a daily, you're going to see that it's plotted it now. Can you see that? It's plotted.
Okay.
It's plotted it for the entire week, where the week started on Monday, then Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday, right? It's plotted it that way. And if you were to do it on a daily, then all I would need to do is take this off. Go to any daily chart, right? Click on the day, current day, previous day, or whatever, current day. Plot it one forward with the settings that I've given you. And then if you go down to the lower time frames, you're going to start to now see this happening for that day, right? This particular day. Now remember, this is the entire cycle for the day. The first box is the accumulation, the second is the manipulation, and the third is the distribution. Within the distribution, there's an additional setting that you can add, which is the 0.8, which basically splits the last phase into two. Because the idea behind this is that halfway through the distribution phase actually caps the delivery. Now, if you remember correctly, or if you remember something, where I used a similar method, but we used it in terms of days. So if I was starting the day, any day that I chose, and instead of using the AMD cycle, it worked out to the exact same thing, where we used days of the week instead. So because time is fractal, if we use this tool, which is basically the same thing, and we plotted it forward, you see that we now get 5 distinct periods happening here. And within these periods, it's actually Monday, Tuesday, Wednesday, Thursday, and Friday. And if you're familiar with ICT concepts and profiles, then you could use this on a daily, a weekly, a yearly, even within a day, every 3 hours on a 3-hour macro, and use the profiles where, for example, this one was Monday high of the week, right? Monday creates the range, Tuesday retraces, Wednesday, Thursday caps the week, and Friday retraces. Right? That's one profile where Monday is the high of the week. But it's more important when you figure these out, that all this is doing is telling you that Monday opened and it went higher, right? Then Tuesday, Wednesday, Thursday went lower, and Friday retraced and closed. So all that now it's your weekly candle, which looks like this, right? Picture that as your weekly candle. where you have a wick at the top and a wick at the bottom, and the open and the close are your candle bodies. Can you see that? Now, generally with these deliveries, Thursday Thursday should cap the week. Now, if you look closely, if I take this off, I take all of this off as well. Let me get rid of this. You can see that the AMD cycle is very similar. In fact, it's the same on indices as Monday, Tuesday, Wednesday, Thursday, Friday, which is important because if this is Monday and Tuesday in the accumulation cycle, right, divided by 2, you get Monday here and Tuesday here. Then Wednesday is the true start of the week or the manipulation cycle. So if Monday and Tuesday are creating the range, or if this is accumulation, then Wednesday is the liquidity run either up or down, and Thursday into Friday is you could get the direction of the week, and it caps the week, and then Friday would retrace, right? So basically the power of 3 cycle here is the same as a weekly cycle. It's the same thing, just different, put differently. So let's get rid of the 0.8, and we're only dealing with 3 here. Now, because it's fractal, you can then go within an accumulation cycle, for example, and you can plot cycles within cycles. Can you now see that? So within the accumulation cycle, I have an accumulation, a manipulation, and a distribution cycle. Can you see that? And if you wanted to go down even further, you'd have to lower the time frame. Within those cycles, you could go down even further and plot a further accumulation, manipulation, distribution within the cycle within the cycle. And you'd see that these give you times, more or less, if you look at the chart, on when to expect certain things to occur. Now, once we get something like that going on, and we come back to the extremely high time frame on BTC, and if I plotted this entire cycle for the year, for example, right? It ends here, December 31st. It started January 1st. So right up until May 26th is one big accumulation cycle. And all I've done is within that cycle, I've split it down again into accumulation, manipulation, and distribution. And within that, what we're doing is we're splitting it down even further and further and further. So everything from the 1st of January right up until the 26th of May is one big accumulation cycle. So this can be a huge range like you're seeing here. You can do that. The manipulation part comes in where 2 things would happen, right? We would expect a run of the range, because remember, if this is Monday and Tuesday, and if the manipulation is Wednesday, so if Monday and Tuesday create the range, then Wednesday is going to run the range, or run the range, either up or down. So if it runs it up, Thursday into Friday would cap the range, and Friday would retrace. So in the manipulation phase is where we would expect the stop runs to happen, right? Makes sense. Now you can see here within this, let's go further within this one, right? Further within the manipulation phase that occurred a few days ago, or weeks ago, you can see that on March 12th, remember I told you between this day and this day they're going to manipulate price. Can you remember that? It's not, it doesn't come out of thin air, it's because of this. Now we finished this manipulation phase and we're on to the distribution phase of the larger accumulation phase. And within that, you can see I've divided it into 3 distinct phases. From here to here being accumulation, manipulation, and then distribution. And on BTC, if we were targeting the weekly order block, which I had here previously, right? So the weekly order block, let's go on to the weekly. Is this BTC? Yeah. Right, clear weekly order block, which is an up candle, and the range high here, my target on Twitter was 29.2, or just above it, giving us 29,447. We fell just short of it, which leads me to believe that there may be one more push higher into that order block before falling over, but we'll have to see what comes in the week for that to happen, right? Now, overall, I would like to have seen, or like to see, price go higher on BTC. But if we go back to our manipulation or our power of 3 template that we have here, right? Two things are going to happen here. Or one of two things. A possible third. These present themselves either in this form here, where you get the accumulation forming a range, then you get the manipulation which clears the range either below or above. DSAX, you can message me here on TikTok. You can join my Telegram, and then we can talk further. The manipulation phase here would run the range either above it or below it, and then distribution, depending on what happens, would go like that, right? So range, run the range, distribute. So this is one form of it. The other form you guys know is the range is this way. We run the low of the range and we distribute upwards. And the other form is in the form of a zigzag, where this forms the accumulation range. The manipulation is only a pullback like this. Doesn't run the range. It probably comes to around equilibrium or optimal trade entry, golden zone, and then it runs higher for the distribution, right? So we're looking at any of these three deliveries for the power of 3. Now, if I'm concentrating on a more bullish delivery going into the second half of the year, then I want to see from here where we are right now, I want to see BTC for the until the April 21st. I want to see, and this being the accumulation phase, I want to see it accumulate here, manipulate here, and then finally distribute down to about 16.7, right? 16.7 being the start of the delivery. Only, if you look at these candles within here, only buy side was offered, right? Look carefully at these candles and tell me whether this market is an efficiently traded market. Only up candles all over here. So that means that in order for this to become efficient again, if only buy side was offered here, they need to start printing down candles within this zone here at some point to make the range efficient, right? So if there's only up candles here, there's only buy side offered, there's no sell side offered, there are willing sellers here. So what we need to do is BTC at some point needs to come back and start printing down candles like we have marked off here, down candles in this entire range here to make it efficient again. Because if we look at the lows, right, we have this is efficient, this is all covered, this is covered right until there, this is covered here, this is all covered, making it a BPR, right, a balanced price range. And even if we're talking BPR or balanced price range and we put a box over it, let's look at it from the lowest candle body to the highest candle body here. And if we are dealing with ranges, then we want to talk about the 50% or equilibrium of that range. Puts it there, sorry, let's do this. Equilibrium of this range puts it at 16,750 as well. Can you see that? Now, one of the one of the elements of a trade setup is consolidation, right? If this was the original consolidation that occurred here, original consolidation, right? If this is the original consolidation, you must remember that price shouldn't expand from a range. Meaning, if this is the range, we shouldn't just see price expanding outward. We need a run on sell side and then the delivery up. Now, consolidation seeks equilibrium, meaning you can see that before price moved away, it would have bounced off the equilibrium of the range. Let's zoom in there. It would have bounced off the equilibrium of the range, or the 50%, you can see it here, and then moved away. Now, on a bigger scale, we want price to come back down to the equilibrium of the range or the original consolidation here. Tap it, make the entire range up efficient again, and then price moves away. So this is one tenet of it, which is consolidation seeks equilibrium. And if price is expanding from a consolidation, then expansion seeks order blocks. So if we were looking for price expanding out, every order block that we could see here, 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 and finally here would all be targets for expansion. So that's the second one. Expansion seeks order blocks. And if we tapped the weekly order block here, we need to show a willingness to break down and eventually get back down to the original consolidation before moving upward. Especially in a delivery where I've shown you in the past, where if you had a delivery like this, right, the price moved away, failed to get back to the order blocks created here, and then made a higher high. People have had entries here. Once you break this high, people start getting bullish and they start FOMOing into the delivery, thinking it's going to do that. What happens? Price comes back, taps the order block or the original consolidation here, back to base, and then it moves away. Now, if you look at what I've just drawn here, we had the original consolidation, price moved away, pulled back slightly, and then went higher. So you would get a whole lot of people longing this entire move up to new all-time highs and whatever, right? But all of their stops would be resting below here. Within this, there's these order blocks here and the equilibrium of the range that is untapped or unmitigated, meaning price has not come back to it. And basically, mitigation of an order block would mean that there are willing sellers within this range here because price was inefficient that have not gotten a chance to sell. And there's also a lot of trap sellers who expected price to do this, and then suddenly price did all of this, right? So price coming back down here would pair the orders, make the range efficient, pair orders within here, and then we can decide what we want to do. People who are underwater or stuck in shorts here, for example, would now sell their positions, and who would buy them back? Who would buy those? Who would buy the positions for people selling inside here? Who can answer that for me? El Dente, do you know?
Ask again. I wasn't attention.
Sorry. If there are trapped sellers or people who went short here or sold here, right?
Yeah.
This entire range is inefficient. There's only up candles, only buy side offered here. So in order for order pairing to occur, there must be buyers and sellers, right?
Yeah.
If there are willing sellers inside here because no sell side was offered, only buy side was offered, once price gets back to here, these guys who are underwater or didn't get a chance to sell below the market price, this being the market price, this being everything here being below it, right? If they sell here, these guys who are trapped, who didn't get a chance to get out, who sold and then price rallied away from them, if they are selling, who would they be selling to? Put your thinking
The
cap.
buyers.
Right. The buyers. And who are the buyers going to be?
Those which got trapped above the market price.
I'll simplify it for you, right?
Yeah.
If people are selling here, right, and we expect price to go down like this, to make this range efficient again, these institutions or larger institutions who have sold here, right? They've sold here. What do they need to do to get out of their position? If these guys sold here, what do they need to do to get out of their position? Mashudu, this is Bitcoin.
Yeah, short sellers from up there have to buy back to close their shorts, right?
Correct. And where would they be buying? They would be buying where they are willing sellers below the market price. So if these guys are willing to sell, then these guys who have shorted need to buy back their positions, are going to buy it back cheaper here. Make sense, Al Dente?
Yeah.
So that is what we are hoping or looking for, where if these guys sold here, they need willing sellers below the market price in order for them to get out of their short positions. And those willing sellers are going to be in inefficient BISIs, right? Buy side imbalance, sell side inefficiency. They're all lying down here. Because all of this delivery was on buy side and no sell side. So in every one of these candles, there's a willing seller here. So if these guys want to sell here and they want to run the price down, perfect. These guys are going to sell it to them. These guys are going to get out of their positions and they're going to sell it to them. And these guys are going to buy it back cheaper, right? Now, if that happens, and in a perfect world, you get order pairing that occurs within here, buyers and sellers being matched up, one of two things are going to happen again. These guys are now all going to get on board and start doing that, right? Or these guys are going to say, F you, we don't want to buy yours. We're not going to sell it. We're not going to buy back your positions that you're selling here. We want to go lower. We'll start to do that, right? So it gives us one of two options that occur here, where this is the range, right? This would be the manipulation below it. And then finally the distribution up. Or, which I prefer, the next stage. We don't want to kill crypto right away. What we expect is let them bring it down here, right? Still within the accumulation range of the larger yearly cycle. Let them bring it back down to 16.7. Then there'll be more guys who'd want to either sell here, right? Because death, crypto is now back at 16.7K, blah, blah, blah. 10K incoming, 5K incoming, let's sell. And then it does that. Where does that take us to? It takes us to the same position that I've just explained to you here now. In order for these guys who have now bought down here, right? The new guys have bought down here. Where can they, or who can they sell to? They are going to sell to people all the way up here in any imbalances created here or here, where on the way down for BTC, there was only sell side delivery. That means they are willing buyers here above the market price. And if these guys are longing here, and if they distribute above old highs or in imbalances where only sell side was offered and there are buyers within these imbalances, then these guys here are going to sell their long positions to willing buyers above the market price who are inside here, all here, right? So we don't want them to kill crypto, send it to 10K, all of that, not right away. So on a larger time frame, let them bring it down, make the entire range efficient again, make this efficient, all of this shit efficient, and then you're dealing with a large balanced price range that's efficient, right? Let's forget that this is a double bottom or relative equal lows, all of that shit, right? Let them do this. Then right in time or on cue, 26th of May, round about there, we had the accumulation phase, we had the manipulation phase, or let's do it better this way. We had an accumulation phase, we had a manipulation phase, and now we had a distribution phase. In this manipulation phase, let them pump this up uncontrollably. Get everyone bullish again. Bitcoin to new all-time highs, $1 million Bitcoin incoming. Right? All of that. Everything starts to pump. I'm telling you now, if it happens this way, from mid-May toward the 26th, 25th of May, buy. Take a dot, throw some names on a board. Throw it. Anything it hits, buy it. It's 2017 all over again. Because if it happens this way, you're going to see a run up, most likely all the way up to about 50K. All the way up to 50K. I'm not looking for new all-time highs on BTC. We're within reason here. We're not looking for crazy shit. Just as we had a balanced price range on the top here, there's the equilibrium of the range here, 50%. It puts us around 46K or so. Let them, because consolidation seeks equilibrium, let them do that. Back to equilibrium. There's order blocks in here. There's 50% of the range, which is equilibrium. Let them do that. And what model is this now? Isn't this the model we know and love, where we had an accumulation phase, a failure swing, the liquidity run, a push down, we come back for the retrace, and then we get continuation. Isn't this the model? And if I'm interested in that being the model, then, and if this entire range going up here on the OLR is a range, I'm interested in 50% of that. Puts us more or less in line with the equilibrium of this entire BPR created at the highs, right? It's a gray box here. I think it's a monthly BPR. Let's just double check that. Yeah, monthly BPR, right? Now, when we say BPR, it's a balanced price range. Note the number of times the price has moved through this range. We had 1, 2, 3, 4, some bit inside here, and then out the range. Agree? So moving more than twice or thrice within the range makes it efficient. There is no need, even though there is inefficiency within the range here, there should be no need for this to come back there. It can, but it doesn't have to. So that's where we stand with BTC overall. Let's drop down to lower time frames here. Let's go H4. Now you guys know last week within the Discord, let's drop to M15 and I show you all the nice things that happened. Because I may have posted 100 different charts in Discord on BTC, but I haven't explained to you what was what, right? Well, not with my pretty voice, at least. I didn't. FOMC last on the 22nd of March was Wednesday, right? The high created here. The low created here. Subsequent days were all within the range, right? This day, this day, this day, this day, until here. On this day, which was Monday, we took the range low of the FOMC candle. Now you would remember me telling you, taking the range low on a daily chart, but failure to close below it means what? Is it bearish or bullish?
Bullish.
It's bullish, right? This is liquidity grabbing. Failure to close below it, what did I tell you it does? It seeks opposing liquidity of a daily high there, right? What happened after that? Let's go down to H4. Look at this very carefully now. There's the range low in black here. I'm going to darken it for you really quickly. Even on an H4 candle, we took the low, but we failed to close below it, which means that the candle body, or the lowest candle body here, would give off support ideas to the left. Let's make that red. If we were to drill down to an even lower time frame, come all the way here, what happened here? You see that? Bounces off support of the previous candle body lows. Now here's what I want you to understand. On this day here, or these days here, we took the candle low here and we failed to close below it on a daily level. And what did I tell you happens? It will target opposing daily high or daily liquidity. It'll reach for the other side. So are we bearish or are we bullish? We're bullish, right?
Bearish.
We're bullish. We're bullish because if it took if it took the lows without closing below on a daily basis, on a daily chart, then we're targeting the other side of the range, which is all the way up here, which is the FOMC candle high. At this point, once support ideas are created, which is what you see in red, all we are doing now is we're looking for an entry model that we know and love, some form of liquidity being taken, right? The candle that breaks the low, this guy, mark the top of it. This is what or where you would look for CSD, which is the change in the state of delivery. Besides that, what do you have here? Even though this is a down candle on this particular time frame, opposing FEGs getting closed above is what? Market structure shift, right? So you got market structure shift, CSD. All I'm doing is look at it this way as well. Sell side taken, buy side taken. This to this now becomes your dealing range. What are you looking for if you are bullish and you have a bullish dealing range? All I'm interested in is
Discount.
50%, right?
Yeah, buy below the 50.
Yep. Anything below 50, which is from here down here. And if I had to fib that even further, right? Let's take 50% down to there. And let me do this. If I take 50% of my 50%, it puts it the 50% here. So now I am looking for an entry which is discount of discount. Have you thought about it that way? Basically the 25% level, right? Of this entire move up. Let's look at it again. Let's see if I can grade it here. This way may make more sense if I do it this way, right? That's the range, and we are grading it. There's 50%. At this 25% level, it's 25% is 50% of the 50%, right? Of the discount level. What do we have there? We're bullish. Remember, we're bullish, right? We have order block here. We have fair value gap. So all you're doing now is you're looking for ICT PD arrays. So you have an order block, you have a fair value gap. Perfect, right? But do you take an entry blindly just because price has come to the level that you want it to? No, you don't. You don't. So what you're looking for afterwards is a change in the state of delivery. Change in the state of delivery. Again, we already had one. We're looking for a further change in the state of delivery where down candle highs are being traded through. If we went down to a 5-minute or M5 here, I'm sure we could get some sort of M5 down candle in this area here being traded through. Right, perfect. Here's the candle we are looking at here that took liquidity here. There's the high of that candle. As soon as this high is broken, you can enter right here. You stop below here. And that's it. That's it. Any entries or any pullbacks into this range, into this order block, right? Let's have a look at this as well. Give me 1 second.
Is 5 minutes the lowest you would go?
I'd You know, on BTC, I'd go lower than 5 minutes on indices. I wouldn't go lower than even 5 minutes on BTC is pushing your luck, right? Because BTC is a different animal. But if you were to go on a 5 minute, the theory is all the same. Everything is the same. You want to sort of see 50% of this range being respected by candle bodies. Say you never used the order block itself, right? What are you looking for then? Rejection block. Longest wick. Pull it out in time. Make it red. This is a rejection block. Can you see all the wicks to the downside here? Even if you entered at 50% of this wick here, puts you right here. Rejection block entry. CSD. All of the things you know and love. Gone. Right? And you saw me telling you that I think BTC just flashed into a buy entry at this point here. Alright, so you missed it, no problem. High is being broken, leaving FVGs behind. I'm going to tell you what this means. When a high is broken with speed that leaves an FVG behind, the very next candle after the candle that breaks the high is a start of a new delivery. Your new delivery upward starts at the candle. The very next candle is this one. Let's make him blue. Let's make him right. This is the start of the new delivery upward. In order for it to gain the liquidity that it needs, this low is run. Sell side is run. You get all the good things that happen. FVG inside here. Highs being broken, leaving an FVG behind. There's your FVG. Lows being broken. Run and sell side. Oh, let me do it this way. There's a low being broken. There's the candle that broke the low. Let's zoom in there. Right, again, low being broken. The candle that broke the low is this black guy. Here's the high of that candle. Once price moves above it, it's what? A change in the state of delivery. From sell, market maker sell model, to market maker buy model. Any pullbacks into those candles are for buying. That's all you need. That's all you ever need. And this will repeat itself. Now, let's look at something here and let's see if we can get something going here, right? If that was the start of the new delivery, then if it's a range, then maybe I can project it upward, right? Let's try something. What do we see happening up here? Right here. 5 standard deviations away. There's your initial impulse is 1.5. Your second objective is at 3.5. And between 5 and 5.5 is your final objective. So if I projected the start of the new delivery all the way down here, from the next candle, let's zoom in again. This candle broke the high. This candle, let's do it this way. This candle broke the high. The very next candle is the start of the new delivery upward. I start here. Even if I went down here, it's fine. But generally I'd start at that low there, right? The very next candle. There's the high it created here before a run on liquidity. Project it upwards. All the way to 3, 1.5, 3.5, 4.5, and 5. That's all you needed to do. Now, you guys know that I set my order blindly here on my exchange on Mexc. On my exchange on Mexc, the order block was 29080. I set an order at 29075. That was my weekly order block. It tapped here and violently broke down. What did I tell you was going to happen? Let me try and paste it from the BTC updates, right? I gave you all two options.
Yeah, 28.8 getting tapped after we broke down.
Yeah.
Hey.
I gave you this option here, right? We go up, tap, and then break down continuously, right? Which means at this point, I think it was here, we go here, tap the order block created here, and then break down violently, or and I just showed it to you just now or a few minutes ago where you have your order block created, you get a front run on your order block, price moves down, it comes back, takes the liquidity out, taps the order block, and then moves away, right? So this was option 1. Option 2, paste, right, this guy. And where were we at that point? There, right? So what is it? It's like this and down, this and down, come back up. I don't know if you can zoom in and see where it says OB here, right? OB. And then we break down from there. There's the OB. I'm going to show it to you now. Right. Now this is where precision, this is where you get precision coming in, right? Look at that. What did it do? My OB is 28.825 or so, right? What's the high on this? 28.82645. Taps the OB, and I think that was the M15, M30 OB, if I'm not mistaken. We'll have a look now. M30 OB, there's it here. Order block not tapped. See? Never tapped it here. Price moved away like it did here. We come back and we tap the order block. And then we move away. Now, this is where precision, you get precision, right? Besides that, what did we have happening here? If you paid attention to it, isn't this the thing we like and love? Right? Let me look for that now. That's the model. All this did here was create internal liquidity here and here to be taken here. If I were to put any, let's have a look. Let's see, have a look at a few other levels here. 50% of this puts us here.
Yeah, even on that foam C day, right? We created a bearish dealing range.
Yep.
Remember, El Dente and I were talking about that morning. So.
Yep.
Yeah.
Or not foam, whatever
Yeah.
data
it was
came
this.
out that we
Yeah.
can't keep anything straight in.
Yeah, it was from here to here. That was your range, right?
Yep.
All we needed to do was flip that range. Let's do it with a grade, where we take from the top to the bottom. Let me move it over. 50% there. That's all that you needed. How would you get into a short in this here? All you needed to do was look for a change in the state of delivery. If this
Yeah,
guy,
so
let me show it to you here. Simple.
that gray candle took the high to the left of the to the right of the big black candle, right? Which is that small yeah. So once we get a change of state of delivery there, then you can take an entry on that retrace.
High taken here, gets traded through here, retracement into the CSD level, and what else do you have here? PD array, you've got two here, right? You've got the actual order block itself here, and you have fair value gap here. That's it. And if you took it even further, start thinking about candles like this. This candle took this candle's high, right? Let me zoom in there. This candle took this candle's high. Then it got traded through here, right? Anything after that should never come above this high again. You see that? This was another entry. This should never come above this because of the CSD created here. What else is it if you look at it? It's accumulation. It's a failure swing. It's your open liquidity run. It's your push. It's your retrace. It's your continuation. Now, better put, it's this. It's the same things over and over again.
Hey, Poison, I just want to ask you, is this rule acceptable for every time frame?
Yes, every time frame. Every time frame. It's fractal.
Al Dente is going to start posting 5-second charts with 100x. Wait for it. It's coming
Yeah,
next
but I don't think that
week.
was Al Dente. Is that Al Dente? Because I see.
Yes, I'm here.
Yeah, but I think that was Kojima.
But I don't have any position since 2 weeks because I was working all the time.
Yeah, Kojima sounds the same as Al Dente. Probably very German.
Yeah, no, it's actually similar, but
Yeah, similar but
not-
different. Yeah. Got me confused there, but
Okay, I shut up.
no, you don't. We love you, my friend. Yeah, Kojima. It's a fractal thing. It doesn't matter whether you're using on a 30-minute, whether you're using it on a 5-minute. You can even use it on a 1-minute. It's the fractal nature of what this is it is what it is, right? If you look, it's where were we? We were probably here, right? You could look at it in take any piece of price action. Obviously, now we have the benefit of hindsight for this. But remember, I think was it early this morning or yesterday, I posted this red level here. I can't remember. And it's not coincidence. Yeah, I think it was this, and I said, let's have a look here. Right? And I said, watch 28566, right? There's it here. There's the same red level here. We ran it slightly. And it's all because this was, I think, M15 up candles or order block. Yeah. Ideally, you don't want to see the order blocks being run here like this. But it is an area where price moved away sharply, so the return to it should expect the same. So the model, you only really need one model, right? All you need is, if you are bearish, you need a run on buy side. If you are bullish, you need a run on sell side. So if I'm bearish and this is buy side, this is the candle that ran it, got traded through. Usually what you would notice or see is that the actual level that was run through that created the CSD becomes resistance in itself. Now if I'm bearish, I want them to start printing what? Up candles, right? Up candles are order blocks. I want them to start printing up candles or order blocks. Now if I wanted to be more precise, then I would use that very same candle, and we could have drawn it out in time, just missed, right? And that's because we had price mitigate into that candle by this candle and these candles. So I'm not worried about those candles in particular. I'm worried about anything here that's unmitigated, which left me with a bit, if you want to get more into it, here, up candles, here, down candles, here, up candles. Between here and here, no up candles. So ideally we would have want them to print an up candle inside this range here. You see that?
But once you said 29,200 was taken in a void line.
Yeah.
Why? Why void? It's a Wednesday.
Yes, it's a Wednesday, but it was between 4 a.m. and 4 p.m. and 4 a.m. if you look at it.
Okay. Okay.
Which basically means none of that happened, right?
Mm-hmm.
Yeah.
So you think now it could get there again?
Possible, because if think about this carefully, there's two scenarios in play here at the moment. There's the bearish scenario where we've tapped the order block and now we want to start pushing lower. There's the bullish scenario where we haven't touched or tapped 29.2 in proper hours or at all.
Mm-hmm.
We have this presenting itself. See that?
Mm-hmm.
Once price comes back to the CSD level, if they give us a turnaround inside here, which means start printing down candles, CSD again, what does that mean? They want to most probably push it higher.
Mm-hmm. Mm-hmm. Okay.
I have just a question. This CSD, is it also some demand from?
No. CSD is just a change in the state of delivery. Well, if you look at, I posted something earlier. It was an index of ICT. Someone created
I
some
saw it
AI
earlier.
thing.
You
right.
posted. Yeah.
So if you look at what the definition of an order block is, it says it's a change in the state of delivery. Now, not everything is an order block, because an order block should be something that has taken liquidity and then resulted in a break of a high or low of some sort. So a change in the state of delivery. So if this order block took this low and then it was traded through, that's the change in the state of delivery. The change in the state of delivery from selling to buying. Again, you could see a change in the state of delivery happening here. High taken, traded through, buy model to sell model. Then again here, you could see a change of state of delivery here. Took the low, traded through, went higher. Then change in the state of delivery there. So it's a constant thing that's being done by the algorithm. You just have to try and keep, you could use that as a scalper's heaven.
So you cannot then say, so it's wrong to say that this is 15-minute demand candle which is basically now CSD. So it's not correct to say
You
that
can't
way,
say
right?
that because this is, you see, what do you need for, what do you want to see to be more confident in a candle doing what you think it should do? You want to see
Start closing candles above the FVG,
right?
right?
But what you also want to see is you want to see sponsorship. Sponsorship means institutional backing. So if you had these down candles printing here, like this is the sponsorship, right? That's the big push out. But if you start to see down candles printing, but not much of a sponsorship here, then maybe this candle or these order blocks hold more weight than the ones below it here. You see? Because this candle, these down candles led to an explosive move. This down candle gave you CSD, but no explosive moves out, no sponsorship, no backing. These levels are not random levels, right? If I were bullish and I wanted more or less an entry level, I'd look at 50% of the range of the liquidity run, which gives me this level here. Look where it is. All I did was I took the start of the delivery candle body to the liquidity run. There's the candle body. I fibbed it from here to here. I took 50% of it. I call it an RD50 level, right? Because all it is it's a range, right? This is a range. And every time or every single time you talk about a range, you have to talk about equilibrium of 50% of that range. So you can see here, my guys know I call it RD50. Now all I would do is what? I would look for a change in the state of delivery around this area, which means
Start closing candles above FVG. Sorry for interrupt. Is it true?
right. So once you look here, right? Initially, before change in the state of delivery, what we're looking for is liquidity grab, down candle printing, opposing FVGs getting traded through or closed above. Not traded through, closed above, right?
On which time frame?
Any time frame. Any time frame.
Okay.
Look here. There's your FVG before the liquidity grab right here. You agree? This
It's
FVG.
clean. It's clean.
Once price closes above it, here, you can immediately go long, but the risk is that your stop has to be below here, because the chances are that price can raid back into the order block, then move away. But that's the risk that you take. But immediately upon closing above the FVG, an opposing FVG, opposing because the delivery was to the downside, we are now closing above, we are running up and closing above an opposing side FVG, which is this guy. Once that happens, you can immediately go long. But again, like I said, the risk is on you. It's there. Because there's a small chance that it can do that and then move away. After the candle.
I'm sorry.
No, I'm listening.
No, because I noticed that usually when it does that, let's say you are now on 15-minute time frame,
Right.
we are now watching 15 minutes, okay? So when price do that, what you now described, it's like usually it wants to fill some fair value gaps on 1 minute or 2 minutes. That's what I noticed. And then it's lower time frame play, because it fills some FEG on 1 minute and then
it
turns
dies.
around and then
Dies.
goes in the direction.
That's
we-
where your
we are
risk
betting
management
on.
comes in. That's where risk management comes in, because remember at the start of the stream, I explained consolidations and I explained expansions, right? If you are, the only time you expect reversals to happen is at liquidity pools, right? I mean, I can't expect a full-blown reversal here if there's no sort of huge liquidity pool to take liquidity from. If it maybe took down here and we did that and then gave me CSD and the models are like, yeah, I'd expect reversal. The alternate is if it's more bullish, and bullishness, all you have to know is retracements seek what? Imbalance.
From liquidity to imbalance and other way around, yeah.
Liquidity to imbalance, imbalance to liquidity. That's all that it is. If you can figure out where the, see, your job is clear. Your job is to follow the trend. You have the rules set in place. If I know liquidity taken, opposing FEGs being closed above, I'm now short from somewhere here or here, right? But I'm seeing this should happen now. Change in the state of delivery, opposing FEGs getting closed above. Do I want to be keeping my short open here? From here to here? Do I want to be keeping it open?
You probably want to TP.
You want a TP because this is coming next. You see that?
And are you watching on 1 minute time frame, let's say, these happenings or monitoring? What do you find? What is like, how to say, do you constantly switch through time frames?
I don't constantly switch, not on BTC. 5 minute, 15 minute, perfect. On a 1 minute, you're going to see a whole lot of things happening here. And if you...
Is it noise? What would you say? Is it noise 1 minute?
It's noise. It's noise. It's noise. But not to say noise can't be traded, right? Because noise can be traded. I can... Remember this red line is CSD on a 15 minute, right? On a 1 minute, where is it? It's here. That's CSD there. This is actually an opposing FEG inside here, being traded above. Price moves away. There's the model here. Pull back, gone. Say I don't want to risk the difference between here and here is too much. What am I looking for then? I'm looking for a further change in the state of delivery. So let's do this now, right? 1 minute. Lows being taken. No CSD yet. We took another low here. And then we immediately trade above. We grab and we move. That's CSD. You can go long there immediately. Any pullbacks into the order blocks here, all these down candles are for buying. Now your risk is only until here. From here to here is what? $50, $60? It's less.
I think, yeah.
It's less.
Dope.
I think we spent a lot of time on BTC and let's have a look at NAS really quickly. Same theory that I told you before, right? Let's go here. Highs were made at the beginning of February, but there was no aggressive repricing lower. It was down, up, down, right? If we look here, this candle at the time took the high, right? The very next candle starts the new delivery upward. The low of that candle is here. That candle serves as liquidity to be taken at a later date. Price moved away again. which gives me the start of the delivery to the first high here. I can project that upward, 1 standard deviation, 2 standard deviation, 3, 4, 5, so on, right? That's on a daily. Price created another high. Sorry. We broke a high here. It pulled back and then it moved away. Now at this particular point, you see this little orange box that I have here. Inside here, and this is on a daily, right? Between here and here, these two candles, is one long green candle with no bodies in between, right? Price may have come down here, may have come down here. There's no full of any bodies within that candle, so we can call it an imbalance in price. Eventually, when it does come back here, price moves away, but again, no bodies inside here. So what does it do later on? It fills it up with bodies. It takes the liquidity here from the original origin of the delivery, start of the new delivery. In order for you to be bullish, you need a run on buy side, run on sell side, change in the state of delivery, off to the races. Again, highs being broken. This candle starts the new delivery upward. There's the low of this candle being taken. Gone. Let's get back to what I told you, H4. Before all the madness, right? FOMC, same as BTC. FOMC range high, FOMC range low. We retraced for many days inside here, contracting price action. Usually what happens is contracting price action or inside candles follow the path of order flow. If order flow is bullish, inside candles, all within the range here, will follow the path of order flow, upward, right? But what needs to happen first? Internal liquidity being created all inside here. Run the low, ran the FOMC low. Let's look on a daily now, right? That FOMC low, like I said for BTC, it ran the low, but failure to close below the low results in opposing liquidity being grabbed. Again, that's the range high of FOMC. So at this point, you should be bullish. Change in the state of delivery. Target here at least. So this was 540, 400 point run, $400 run. Now we did have slot, you would remember, I don't know if you're still there.
Yeah, 13.2.
13.2, right? 13.2. And I didn't want to see it run so high, but I did tell you guys, I think in the last stream even, the imbalance created inside here. Besides that, there is fair value gap inside here. There's a down candle here, up candle there, sorry, and then these are down candles. Then there's an up candle here. So between here and here, there's only down candles in that range. They are going to want to print up candles inside here to balance this off. Then maybe we see something to the downside, right? So for now, we are still a little bullish on NAS. If you are looking for entries, then of course it's going to be any retracements to the order block here. We take that to go higher. So if you are bullish for the week, then I think, is it FOMC this week? Oh, it's NFP, sorry. Is it NFP this week? I think it is. So if we get Monday opening, Monday, Tuesday going lower, then Wednesday, Thursday, Friday doing that, retracing and closing, means Monday, Tuesday goes lower, Wednesday, Thursday higher, Friday retraces. See that? So protraction. Yes.
Do you think it's needed to go all the way down to the order block? Let's say, is there a possibility to let's say go to fair value gap, which is below this last candle?
Of course.
Like maybe on 30 minutes, on 15 minutes on
I
fair
don't
value
really
gap?
use to be honest, I don't use H4 for trading, right? You can see it already. It can come just here if it wanted. But again,
That would be, let's say, on 4 hour, which
let's have a look on 4 hour. On 4 hour, it's a nothing. This is the main one. On M15, M30, it's nothing. All it is liquidity. Remember, not every down candle is an order block. This, not necessarily order blocks. These are all liquidity here. Right? You agree? All liquidity resting below here. So for it to do something like that, that'll be good. Whether it does it or not, we'll have to see. But again, efficient. Is this range efficient or inefficient? It's inefficient. It needs to be made efficient up to at least this point of reference, an old high. Remember, old highs and lows are fair value for buying. So when price returns to an old high, it's going to be bought. Just look for change in the state of delivery. Take it up. Old highs and old lows are the only time you are allowed to buy something that's not in discount. So if we had a dealing range created, we would look for 50% of the range, at least, to buy, right? But with broken highs or lows, any return to it is fair value for buying. It's considered discount. We can buy there. We don't have to wait for 50%. Let it come there, give us a change in the state of delivery, and we move. That's all.
High time frame, Naz has left so much garbage
Too much.
down to like 11K.
Too much. Now,
SPX also.
yeah, it's shit is what it is.
S&P 500 also. All the markets went crazy.
It's all shit. That's what it is.
Mm.
All shit.
Yeah.
This is sort of contracting price action here, right? And we know how these end. I don't use them, but we know how they end. One mother-sized bull bear flag. Remember that this was the low, this was the high created before the break of the low. This houses liquidity. Do not underestimate NAS doing that and then falling over, because this is inducement. Now,
I mean, would you consider, if it did that though, would you consider that whole thing then a bullish dealing range?
I wouldn't,
Because it took a low, then
yeah, I wouldn't. I'll tell you why. Because order flow is king. If the order flow is
Yeah.
predominantly bearish, right? Remember, I told you.
Right.
I told you before. You are gonna get times. Let me try and find one for you, right? There are gonna be times where, and I'm trying to find one where I actually took the trade, right? There are going to be times where you are tested. Here, right? This is an example here, prime example. And I'm only showing this to you because I know exactly what happened on the lower time frame. this was the overnight session happening around here, right? We shorted down here to this, the start of this range here and the fair value gap here, and then we longed it up here. Now in your theory, I'm just going to do this quickly because I want to go down to a 5 minute. Right, based on what you said then, right, is if we had taken sell side here and then buy side here, right? Say that none of this price action existed. Right? Let's bring it to the front. There. Say none of that price action existed. You'd consider this a possible bullish dealing range, right?
Right.
From here to here. Because it ran sell side, it ran buy side. So it must be a bullish dealing range. And this is where I went short right here when this candle was traded through. That's CSD. As soon as it was traded through on this little pullback, I was short. Targeting down here.
Yeah.
Why?
But it never gave up. Because we broke through the candle that took the high.
Yeah, it never
Had a
gave a
change in
retrace
state of
after.
delivery.
Yeah, never gave a retrace
And
after.
then there was no real, there's no real change in the state of delivery or market shift on the way down to give you an entry even to go bullish. So
in this case,
thankfully.
look at time of day. This was this is wrong here. Let me get to New York. I don't know why. New York is now -4, right? There. 10 a.m. volatility. Right? At 10 a.m., we know it's sort of a distortion period here. Volatility comes in. Look at the delivery that happened here. FEGs being created are not being traded through. Any pullback into the range is for shorting until objective is reached. My main reason for this not being a bullish dealing range, even though I wanted it to, is that the last candle here, or the lowest candle here, was an up candle. If this was a down candle, then maybe my thought would have been different. But you can't have the lowest candle here being an up candle. That's not an order block. That's liquidity. So at this point, we do the things we know and love, and then we look for change in the state of delivery. Yeah. You can consider this a bullish dealing range. That a pullback. Change in the state of delivery. Carry on. So same story that we're looking for on a high time frame. If you, I'm just trying to find an example here. We could find one here, right here. Okay. There's a low. There's a low here. This is the high before the low. Price runs up, takes the high. Would you consider that a bullish dealing range? In hindsight, no. Order flow is predominantly bearish. You wouldn't consider that this from here to here is a bullish dealing range and want to long that.
Yeah, even in that move down right to the left, there's a low taken.
Yeah.
That long, and then the highs taken,
Yeah,
and then we
see
just
there?
melted.
Meltdown. So this was inducement. It's a high before the break of a low. We don't short until inducement inducement highs and lows have been taken out. Look at the retest there. Can you see that?
Mhm.
Let's draw this out in time. So, the same thought process here, just on a slightly bigger scale. Bigger scale, bigger move, right? Take this guy out. Then give us CSD, market structure shift, all that shit. So now we wait. Now we wait. Trend is up here, no doubt. It can go sideways and up. We don't know. Or it can just go carry on going up. We don't know what NFP is going to bring to the party this week. It all depends on what this guy is doing. Remember I told you lows are created by an up candle we don't like. Also imbalanced here, no down candles inside this. Between this down candle low and the actual low is only buy side. Imbalance over here, we haven't gotten to it yet, so I assume or am assuming that this gets taken. So once we take that, then we can see some strength coming in, which means if this gets taken and if dollar is weak, NAS is going to go up, sort of in line with what we expect right there. If you look at the USD ZAR, look at this shit. Melted, completely melted. So dollar weakness is strength here. Now I don't like it, even though this is my currency. I don't like it because I'm trading in terms of dollar terms, so I'm actually losing money here. But in terms of the work I do, it's good for me. I can import. It's cheaper for me to import. Again, this is on a daily chart. Buy side taken, sell side taken. Right? Now here's an exception here. We took the liquidity below here, but we failed to grab the opposing liquidity. Also, a bit tricky in here. We closed above FEGs, but again, rand completely melted down. And it will continue to do so most likely. So, dollar weakness coming in here, which will give us some strength in NAS. And let's call the high, what figure is this? Let's mark it off. 13.7. It's a shit thing to see it go that high. Seems very bullish, right? But what is that in the bigger scheme of things? I think we've done this one before though, right? Let's have a look. Just under the 6. So we haven't even gotten to the 50% of the entire swing down yet. Why were we so overtly bearish? I don't know, Slot. We haven't even gotten to the 50% yet. We're almost there.
Yeah, I think
That's the
we've been just
equilibrium, right?
taking each leg, right,
Yeah.
as its own thing instead
Yeah.
of.
So take the inducement high. Show us there hasn't been any aggressive repricing lower. There hasn't been a willingness to go lower. But what it has created is a shit ton of liquidity, relative equal lows. You know what's going to happen there. And all of these on the way up. And these guys. And here, and here, and here. And it'll continue to do that. Because when the meltdown comes, it's going to be like that. It's coming, my friends. It's coming. we'll leave this fib on because and that's where the imbalance is, exactly at the 50%. So we'll leave it on for now, and we'll target 13.7, see what it wants to do from there. Are there any breaker blocks that we could possibly use? Could possibly use this guy here, right? Drawn out all the way in time as a breaker. So when price comes into here, you can see what happened the last time. Order pairing, price moved away. It's the same as support resistance ideas created, right? If I were to flip this around, price was in here, it moved away. Came back, it moved away. What are retail traders thinking when you see something like this? If price moved away when it was here previously, when it came back, it also moved away. So when it does come back, what should it do? Move away. This is where the ideas of support and resistance are created. And if you do break this 13.7 mark, right? What are majority of people going to start thinking?
Breakout long, new highs. Yeah, inverse. Yeah.
The moon, right? And then all we do is just melt down.
Or we just go from here to the moon.
Yeah, possible. Anything is possible. But the Fed have a target, I think, inflation rate of about 2%. And so we'll have to watch what the interest rate hikes look like. So 25 basis points or staying the same, it should be okay. Anything higher would be bearish.
I honestly think the next big shoe to drop is going to be the recession issue. So
Yeah.
I think even if they cut rates, it's going to be because they're worried about the economy. And ultimately, the bigger drops have come after the Fed stops rate hikes or starts rate cuts, actually. So the second leg of the bear cycles are typically once the rates start coming down. So
And the
I mean, we can be
pivot,
they can be bullish initially, but ultimately the big drop comes after the rate hikes stop or rate cuts start.
Yeah.
So
Let's look at
just something to
some.
kind of consider.
Yeah, let's look
I
at
think we
something
will
else
saw
here
it in
on
the
the
price section as well. It will be, I think, first saw in price section, then and the news will came afterwards. And
let's look at something, but this is too bullish for my liking, right? If this is an order block here on a yearly basis, we are now at that order block.
mhm.
Let's call it there. Make him orange. And 50% of that is still quite high, 14.3. But that's like last resort, last stand kind of levels all the way up there. So I also want to do one more thing while I'm on here is grab this, do that, come down to a daily. Right, let's take away the let's leave the breaker to one side. Take away this guy. This is inducement high. This is order block. This red level here, 50% here. That is the, I suppose on a yearly basis, if we close above that level on a yearly basis, then I would reconsider being bearish. Okay, that's the line in the sand by the end of the year. Right now, we are in the final, let's have a look here. All lines up now. Remember I told you at the start of the stream, these profiles or deliveries happen in three sort of phases, right? We had accumulation, manipulation, and there's the distribution coming in here. Now, if that's the first half of the year, first quarter almost, that means we can expect this kind of shit here to happen right up until about the 19th of May. Right until the 19th of May. After that, we let them manipulate. Now within
So
this,
does that make sense for you with, because the Bitcoin cycle, the drop is, we're expecting it to drop until around that time,
Yeah.
right? So Nas up, Bitcoin down.
right, so same with NAS here. They could do this, do that, and do that. Right? Possible. Giving us that kind of flat correction there, right?
Mm-hmm.
And then they do that in the manipulation phase. And then the distribution phase does that. Same as BTC.
Yeah.
We'll just monitor it.
So I'm just monitoring the BTC thing you said. We watched earlier about closing above FVG. So we say we can start be bullish, and it's exactly happening. 1 minute on BTC closes above the candle which broke the last low. We are pushing high on. We are pushing higher on 1 minute, like.
Yep.
And it's the same setup, right?
Same setup.
We closed about this FVG, yeah. And what would you say, like, what, if we push higher, what would be, let's say, target for this lower time frame scalper, however would you
Or
call
for
it?
a low time frame scalper. Right.
If
So
we continue to go up, like,
Right,
where
so
would we
if
start?
this
Above
was-
the high?
if this was, obviously you're looking for highs. There. Always a high. It's always going to be a high. The moment you start to see shit like this happen now, right? Is where, and this is why I don't like a 1 minute. Because CSD means nothing if it isn't at a place of interest. Meaning, there's nothing here really for me to look at for CSD, right? You agree? But on a 1 minute, I'm seeing CSD. So does it mean I put weight to that? No, it doesn't. Because you saw the same thing happen here. High being broken, candle got traded through, then what happened? Shut up. Why didn't it go down? Because you're in the middle of nowhere here. So just be careful how you use CSD, because this could only all just be retracement on this time frame.
Can you put it on 1 year time frame?
On 1
year.
1 year,
Yes.
12 months. Right.
We are actually at the order block.
Yes. I didn't notice that. Let's draw that out for you. There, and we'll make him big red. And the bottom of the order block there. Yeah. But then again, you see, it means nothing for me to know that this is at the 1 year order block. Why? Because I'm not taking a trade based on a 1 year order, on a
Yeah,
1 year time
exactly.
frame. This can go
But it's a,
here, do
it's a
something here.
bearish situation, actually.
Yeah. So
Okay.
you see what's more bearish for BTC is if on a yearly basis it closes below here. 13,868. Let's write it out here. Close below yearly FEG is market structure shift. This candle right now may be setting itself up as just a wick. We don't know. Or we actually do go higher here. So it comes down and then we go higher on higher this year, and then later on. So what is this candle also creating on a higher time frame? This candle in itself is going to be an order block for future down candles. Yeah, that'll be interesting.
Okay.
On a here again, order block here, and we are in FEG as well, right? Of a 3-month cycle. Let's have a look at where 50% of that is. Right where we are right now.
It's similar.
So even with this
Complex.
case, we don't want to close above 50% of this quarterly candle FEG created. So this is why I'm saying for now, let us do this. We've done this move. Let us come back down to order block here. Let us do this to equilibrium. On a quarterly candle, this would make more sense because between here and all the way, let's see the high of the previous quarterly candle that ended in March, right? So this space between here and here was one-sided delivery, which was sell side.
Is unbalanced.
Sell side, right? Which means they are going to want to print up candles in that range right up to here. So if we get the next 3 months going down, and then the next 6 months does that.
So high, the breaker is actually, when I see it right at 0.75.
Yeah,
How much is this
that's about
in
46K,
dollar?
46 to 50K.
Sir, 33,000.
If you're looking for a breaker
Yes. Here's the breaker. Yes.
on a weekly or monthly or what?
On this one, on three months.
There's a breaker all the way up here, and a breaker down there.
Isn't it the FIP 0.75?
Yeah,
Isn't that the breaker? Yes.
yes, there's a breaker here.
So 33,000.
We're in the breaker now. Just below it. Or, yeah, I think just below it. But the idea again is this. I've explained this in the beginning. Do that
Okay. Mm.
and come up here. This is the original consolidation on the monthly. There's the equilibrium of it. Consolidation seeks equilibrium. Come here, fall off.
Okay.
There's the model again here. It's the same model. Now imagine if you knew your model, or you had your model all the way up here, right? High being broken, CSD, retracement. What's up?
Stop.
Why?
Just stop.
What happened? Huh? What happened? My son wants me to stop. Right.
Yeah.
High being
Stop
broken.
it.
High being broken.
Family first.
High being broken. CSD, retracement, gone. All the same model. So I don't have to tell you what's going where, what's going to do where. I can guide you. I can tell you from experience. And I have a lot of experience with Bitcoin so far. Max pain scenario is 16K, then higher, then down. Right, we're going to leave it at that. I'm going to cut the stream now and upload to YouTube.
Thank you for the lesson.
No problem.
Thank you.
Hey, Poison, we don't need to. You don't need to do this on the chat, obviously, because I know you got to go.
Yeah.
Can you do the accumulation, manipulation, distribution, like on a high time frame on the nat gas chart, and post that in Discord for me?
Yeah, of course I can.
Just to see if we can
I just want to
look for a
see
timing for when this bottom might come in.
I just want to see something here. If I have nat gas here or where? Nat gas. Where are you? There you here. What time frame were you thinking? Yearly?
Yeah, yeah. I mean, this is a super high time frame move, right? So.
Jesus, look at this candle here. Fucking crazy.
What is
I mean, but that's the thing. If you think about just to go back to that order block, right?
Yeah,
It's,
what the hell? Right, so remember, I think we took 50% of this candle here, if I'm not mistaken. Yeah, so 1.1833 is where we would like things to happen. AMD, daily. Yeah. I'll start to break this down for you into the chat, right? So we have all of this
Okay.
as an accumulation. I'm thinking the manipulation starts to come in from May onwards as well. And then we have the distribution. So if you had to think about it, is we go like that, then we do that, and then we start to do that. So think about it in terms of boxes there. And possibility that nat gas bases around here until August, right?
Mm-hmm.
A base would actually be better for what you want this to do after August. So from May to August is where you are going to be looking for the buys. So there's no rush.
Yeah.
There's no rush here. If it bases here, I'd be super bullish on nat gas. So let it do its thing. I'll post this in the group for you a bit later. No problem.
Okay. Perfect.
Cool.
Thanks, boss.
Thanks, guys.
Thank you.
Cheers.
Thank you.
No
Bye-bye.
problem, Kojima. All right, TikTok guys. I shall catch you guys later. This will be up on YouTube in about an hour or two. If you guys have any questions, you can join my Telegram and I will answer anything there. Cheers.